Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter. We are at the midway point and options expiration Friday. Joining me at the Nasdaq FedEx options trading floor is Shawn, Cruz of TD Ameritrade. We've been co-hosting the morning together. Thank you very much for joining us throughout the morning. And we're sitting here with the averages, again, at all-time highs or just about there. It's been quite an extraordinary run over the past week, even just the past week.
It has been, and we talked about earlier on in the morning watching the VIX going into the day because the VIX was hovering slightly lower to, if not unchanged, and it's actually pulled back a little bit more. And I think that does build a little bit of a bearish case for some of these indices going into the close.
Right, I mean, even if you've had a basket of tech stocks, right, which is quite common, there's a lot of heavily traded names that are out there, and you've had that significant run, you might want to start thinking about hedging some of these positions. Like, for example, with the NQX, which is now a fifth of the NDX, which makes it more accessible to retail traders and to advisors.
And if you're looking at a lot of portfolios out there, and if you're just looking at something even like the S&P 500, the overweight from tech because of the relative outperformance of those names is something that if you're an investor, you really want to focus in on as a risk sitting in your portfolio. Mm-hmm. So if you really want to hedge your portfolio, really what you want to hedge is those stocks that have had these massive gains, that have had these strong run-ups so far in 2018. And if you're looking to do that, something like NQX options are a way to go out there and hedge that exposure.
Well, let's talk about going into the final 3 months of the calendar that went by really quick. Mm-hmm. By the time we get to December 21st, we will have already been through midterm elections. We will have been through potentially 2 more rate hikes. We will potentially have gone through a government shutdown. There are a number of catalysts on the tape, so I want to get your feedback on some of them. Interest rates, let's start there. It has been telegraphed by the Fed what it's thinking and what it's going to do.
So a lot of these almost dovetail into one another, but interest rates right now for the Fed are very interesting because you almost have 2 very strong reasons that they should and should not do something here going into the year in terms of hawkish of policy. One, with unemployment so low and the economy seemingly firing on all cylinders, that's a case to hike interest rates because you think the economy is strong enough to withstand that. On the other side of things, though, you have the yield curve flattening out. And so if the Fed goes out there, hikes rates too aggressively, you're going to push up the short end of that curve. And if the far end of the curve doesn't rise, you have an inverted yield curve, and that is usually not a good sign in terms of the future of an economy. Usually there's a recession within a year or 2 after that yield curve inverting. So those are the 2 things the Fed kind of has to balance when they're thinking about policy decisions.
Right. Now, how about the midterm elections? I think there's thought out there that we could see volatility into the market. I don't know. I kind of feel like we might get an initial reaction, like when Trump got elected in 2016. But in fact, his policies are in place and they're not going to change overnight, and a lot of regulations have been rolled back. Do you think it's going to be more of a very short-term event or something that could change the composure of the market?
I think it's going to be a little bit more of a short-term trade around that because, like you said, you already have the tax policy enacted. You have plenty of regulation that have been pulled back. Both of those have been tailwinds for a lot of these companies, and especially tax policy with earnings. I think that will be something, be ready to maybe weather a little bit of volatility, but from where I'm sitting, I don't see that really meaningfully moving the needle in the long run in terms of expectations.
Right, and I also think another thing that's going to play into it is trade tariffs and when these are going to start trickling down, which is why I'm looking forward to Q3 earnings season. We heard a little bit out of this with Micron last night where they think it's going to start to trickle down into their business. So between Q3 earnings expectations and holiday 2018 spend trends, I feel as if they will look good, but then we have to look at guidance going forward when they start commenting on the tariffs.
And what's interesting, so out of the S&P 500, we've gotten forward guidance from 98 of those companies. 74 of them have issued negative guidance. So that's something unusual that has actually pushed down the expected growth out of the S&P 500 for Q3 from just over 20% to just below 20%. That's something to keep in mind. They're still expecting double-digit growth in Q4, but in the first half of 2019, they're expecting that to pull back into single-digit. And if you think about what we're looking at with the Fed and what they're going to do, I think that has implications for the dollars, which also has implication for a lot of these multinational corporations that are going to be trying to repatriate some of those earnings. So you have 2 potential headwinds there for those internationals, tariffs, and then you also have the implications from a stronger dollar hurting earnings as well.
Right, so as a longer-term investor, it might be tricky getting into it now, but longer term, these are the cycles that we go through, and I don't think it's necessarily a panic moment like we had during the financial crisis. We've been talking about that all morning, the lessons that we've learned over the past 10 years, and I think overall we've gotten a little bit more smart, in terms of the
hindsight's always 20/20,
right.
But if you think about it, 2008, 2009, those are some of the greatest buying opportunities of all
absolutely,
time.
yeah.
So I think right now when you do see pullbacks, to the extent that it works with your investing plan and to the extent that it might be an opportunity to go out there and look at rebalancing, I think that's an interesting use case for a pullback. It uses an opportunity maybe to rebalance, rotate into some of those names that are a little bit beat up by selling some of those names that have been outperformers.
That's what we see in the IMX every month as well. I mean, even if you just isolate the past 18 to 20 months, right? So when we got that dip on the overnight in 2016, right, when Trump's, we found out that he won the election, look at what the market has done, even just in that 2-year period. So sometimes, these type of events could lend to those buying opportunities that you were mentioning if you still fundamentally believe that the market and the economy is strong.
And I think the shining example of that was Facebook earlier on this year. When they got up to 190, they pulled back down to 160, and what we saw was clients, TD Ameritrade clients going in, buying at that 160 level, and as it recovered back up to the 190, they took some profits, they rotated out, and they found other places to put their money to work. So if you see a lot of, I'd say, froth coming out of some of these multinationals, take a look and see if maybe there's a little opportunity in there for you to allocate some money into those sectors on those pullbacks.
You have to trade very tactically, especially with the market that's at these levels right now, and you're looking for those individual names.
And just come with the understanding that you might have to ride out a little bit of volatility along the way.
All right. Well, thank you very much for joining me throughout the morning. We'll see you again in December. The 3 months is going to go by quick.
Let's hope so.
All right. Right. And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.